Hello, everybody, and welcome. This is Managerial Accounting. These are the general concepts that we're going to be going through and exploring for the inventory part. So we've seen already, okay, so we've seen kind of essentially a breakthrough, or a walkthrough in terms of what happens in the manufacturing process. It's different than a retailer. Retailers just focus here. In manufacturing, we have all these other things happening over here. So this is what we're going to kind of go through and look at right now. Okay, so as I'm looking at this over here, so for manufacturers, right, we have raw materials inventory, right? And when we're looking at inventory for a manufacturer, it's going to be in different stages. It's going to be raw materials inventory, and then work in process inventory, and then lastly, finished goods inventory, right? Raw materials, they are untouched. It's raw materials to us. And, in order to take those raw materials, we want to convert them basically into finished goods. And how is that going to happen? It's basically going to go through and become a part of work in process. Once it's done out of work in process, we call that the cost of goods manufactured in terms of how it goes over to finished goods inventory. Once it leaves finished goods inventory, it's then going to go into cost of goods sold. What's very important is as we are going through and looking at all of these different costs, any types of raw materials, and we'll look at a moment, conversion costs, which are referred to as payroll or labor and overhead. These are all product costs, meaning that they are directly related to the production of the inventory and making that into our finished goods. So let's take a look over here. Okay, so in addition to raw materials, finished goods inventory, and work in process, right? So if I'm a manufacturer, on my balance sheet, my inventory is going to be broken down into 3 categories, and these are physical items. Raw materials, I can go out and count it. Work in process, well, I can observe that the inventory is being, worked on, and we're going to make it, our raw materials are being worked on. It's going to be ultimately converted to finished goods. And then our finished product, that is what is going on the balance sheet. However, raw materials does not go into work in process and becomes finished goods on their own. Rather, we're going to use 2 what we called holding accounts, or we're going to add in a little bit of work to help us convert the items or the raw materials into finished goods. And these are going to be factory payroll and factory overhead. These are going to house production costs. However, unlike raw materials, work in process, and finished goods that we can physically observe, the factory payroll and factory overhead are going to have to close out to 0. Very, very important. These are temporary accounts, have to go to 0 by the end of the period, meaning they're going to have to be allocated into one of these accounts, and we'll see how that works momentarily. So what are conversion costs, right? So the raw materials in inventory is what we're buying from outside suppliers. These are not finished products. These are the base materials that we're going to put through our manufacturing process to ultimately have it become finished goods. How are the raw materials converted? Well, we're going to have 2 costs. We have factory payroll and factory overhead. So factory payroll, which I call conversion cost number 1. Factory payroll are payroll costs, factory payroll costs that directly relate to the conversion of raw materials into the ultimate finished product. Factory payroll is made up of 2 components. So the total factory payroll has to equal the direct labor plus the indirect labor. In fact, that point was so important, I wrote it over here. So what is direct labor? I am directly working on taking that raw material and making it into a finished good. That is a direct labor. For example, if I am Tesla, and if I have an assembly worker that is working exclusively on Model 3s, that is going to be direct labor for that particular Model 3. What is indirect labor? Well, indirect labor is what if I have a floor supervisor that is watching over not only Model 3, but Model Y, Model S, and then the Cybertruck, right, that I want. So when we go through and look at that, I'll do a total plug promotion if you give me a Cybertruck. It should be fun. So with the indirect labor, right, this is something where I can't tie it directly to that model. It can't tie it directly to the Model 3 like the direct labor. However, the indirect labor is something there like they're going through and they're looking through all of the products. So it's part of production, but I just can't tie it to one product directly. And we'll see how important that is when we get into job order costing. So we've got direct labor and indirect labor. Now, what's very important to remember is that you'll see things like accounting staff salaries, sales salaries, executive salaries. Those are not factory payroll, right? They do not directly relate to production. Rather, these are what we call period costs. They are selling, general, and administrative expenses. They are not part of production. You will get questions that will try to trick you into putting those costs into production, but we do not want to do that. Let's take a look at the next one over here, factory overhead, right? So we have two to make these raw materials into finished goods. Just as a reminder, right, we have two different components here. How does that happen? It's with factory payroll and factory overhead. Let's take a look at factory overhead. So over here, if it's not direct materials, direct labor, and the account title has the word factory in the description, it must be factory overhead. Costs that are related to the manufacturing of the product. Remember, this will ultimately become cost of goods sold. So here are some typical factory overhead costs. So some typical factory overhead costs, factory insurance, right? If it has the word factory in it, it's going to be part of factory overhead, factory rent, depreciation expense on factory equipment, factory utilities, factory security, right? Factory janitorial services, whatever it might be. Additionally, right, indirect labor is part of factory overhead. We don't call it direct labor, it's indirect labor. So it's going to travel down into the factory overhead from factory payroll. We're going to learn about indirect materials when we go through and do job order costing. That is opposed to direct materials, but just don't worry about that for right now. We'll see it later. Our factory overhead costs are not, and this is also really important. Again, it's not selling, G&A, executive salaries, general accounting. If I have depreciation expense on office equipment, if I have office utilities expense, office security, office insurance, all those different things are office rent. Those are period costs and are going to basically need to go through and be expensed out immediately. So what we're really focusing on here for factory payroll, factory overhead is it has to relate directly to production. Remember that questions will try to trick you. They're going to give you period costs such as selling expenses, and they're going to try to make you think that they're product costs, but we're not going to make that mistake. Remember, as we're going through and looking at this kind of big picture, right? What goes into our multi-step income statement? One of the most important carryovers from financial accounting into managerial accounting is the concept of the multi-step income statement. It's like the multiverse, right? So a little bit strange, but let's go ahead and look at this. We've got over here, sales less cost of goods sold, right? What's going to be in cost of goods sold? These are my product costs, materials, labor, factory overhead. That's what goes into cost of goods sold. Remember, our cost of goods sold, as we're going through and looking at this, it has to go through and travel through this process, right? It starts raw here, payroll, overhead, and this is the way it's going to travel over here, ultimately to cost of goods sold. These are product costs. Over here, this will give us our disgusting profit. No, it is our gross profit. How much are we making off of the sale? Less or off the sale of the inventory, less our selling, general, and administrative expenses. These are period costs, sales commissions, factory, and didn't say factory, office insurance expense, office supplies used, office rent. Okay, it sounds like a game of password, but it's anything that's a period cost, selling, general, administrative. This is going to give us our operating income, other income expense, and that's going to give us net income before income taxes. So I want to thank you for joining me here today. Please leave any questions you might have below, and appreciate you liking and subscribing to these videos. Remember, if there's anything else you would like to see, please feel free to leave them in the comments, and I'm happy to make more videos. Have a great day, and I look forward to seeing you on the next video. Have a good one.